After a 2-year legal battle, the Chongqing Yubei District Court has found that the media defamed Sun with its false contents and ordered it to retract all of them. This final judgment rectifies the injustice Sun has long endured and also sends a strong message to all media outlets that they should refrain from publishing unverified information. TRON, TRX. TRON, TRX, is a platform for content creators and consumers. Its low fees and fast transactions make it a popular place for bad actors to launder funds and exchange them into fiat currencies. In fact, TRM Labs reports that TRON is a top choice for hackers linked to North Korea. The blockchain's popularity also makes it an attractive target for ransomware attacks. Despite these concerns, the price of TRON has continued to rise. The latest accusations from Chain could spell trouble for the company, but the founder of TRON has denied all claims. In March 2024, the SEC charged Justin Sun and his companies with unregistered offerings and market manipulation. The SEC alleges that Sun used his alter egos to promote and sell the TRX and BTT tokens without the required registration. It also alleged that Sun violated anti-fraud and market manipulation laws by engaging in wash trades to artificially inflate trading volume. The lawsuit claimed that Sun compensated celebrities like Soulja Boy, Lil Yachty, Jake Paul, and Lindsay Lohan to promote the tokens. Initially, Sun argued that the SEC had no jurisdiction over him and his companies. He cited measures he had taken to avoid the US market and claimed that his company Rainberry was located outside the United States. However, the SEC responded that Sun spent 380 days in the United States between 2017 and 2019, and he traveled extensively on behalf of his companies. As a result, the court found that the SEC had personal jurisdiction over Sun. The lawsuit is expected to proceed in the Southern District of New York. Chain's legal team has filed a motion to dismiss the suit. They argue that the SEC has overreached its jurisdiction by attempting to apply US securities laws to foreign conduct. They also cite that the SEC's attempt to use the forum non-convenience doctrine to compel a case in the United States is flawed. The court is expected to hear the arguments next month. If the SEC is successful in its suit, it will be a significant setback for Sun and his companies. XCN. The SEC's latest filing against TRON founder Justin Sun intensifies the legal battle over allegations of unregistered securities sales and manipulation. The SEC's lawsuit seeks to impose a series of penalties and injunctions against Sun, his companies, and exchanges. It also asks the court to award the defendants disgorgement of ill-gotten gains with prejudgment interest and civil monetary penalties. The case could have far-reaching implications for the crypto sector, particularly those utilizing the eco-fundraising model. A successful resolution would set a precedent that would force digital assets to comply with US securities laws. Moreover, it would provide legitimacy to the industry and allow it to gain mainstream acceptance. In its latest filing, the SEC has accused Sun of promoting and selling the tokens WBTC and BTT to investors in the United States without registration, and of engaging in fraudulent, wash trading, to manipulate the prices of those tokens. It alleges that these activities violated federal law. Sun has denied the allegations, and he has filed a motion to have the lawsuit dismissed. According to the SEC's complaint, Sun and his companies paid celebrities like singer Austin Mahone and rapper Deandra Cortez Way, known as Soulja Boy, to promote WBTC and BTT on their social media accounts. He has also allegedly hired other celebrities to perform marketing services for his businesses. The SEC has also alleged that he misrepresented the value of his products and services. As a result of the SEC's new filing, many exchanges have decided to delist the tokens from their platforms. Coinbase, for example, has announced that it will no longer list WBTC on its platform. The company cited updated risk assessments as the reason for its decision. It also cited concerns over Sun's reputation as an influencer and the potential for his companies to engage in market manipulation. The XCN price has surged over 24% in the past 2 weeks, largely due to increased demand from speculative traders. The price of the token has also been boosted by positive fundamentals, including growing demand from institutional investors. Onyx DAO. The lawsuit accuses Sun of promoting the XCN token with fraudulent schemes. It alleges that he manipulated the token's price by leveraging a vulnerability in the XCN blockchain. The attack was possible because the XCN blockchain did not properly validate transactions. As a result, attackers were able to withdraw 4.1 million VUSD. During the attack, XCN's market position plummeted. The suit also accuses Sun of misappropriating the tokens of XCN investors, and of selling them for personal profit. It cites screenshots of conversations between Sun and the project's founder, An. The conversation shows that Sun was pushing him to keep the transaction private, even though it could expose investors to significant losses. It also accuses Sun of violating the Commodity Exchange Act by making false statements and misleading customers about the product. It says that Sun manipulated the value of XCN to profit from the hack, and also that he misappropriated XCN's treasury fund. The suit also accuses Sun of violating antitrust laws by limiting competition. Defendants argue that they cannot be held liable for the alleged violations. They argue that the CFTC's theory of DAO liability is flawed. They also point to a recent settlement between the CFTC and the architects of Uki DAO, which included a finding that members were personally liable for the DAO's debts. A court may hold a DAO liable if it reaches the threshold of being an unincorporated, for-profit association under state law. However, the alleged violations in this case do not meet this standard. For example, the alleged partnership allegations are too broad. Moreover, the alleged partnerships do not include every person who owns one of the DAO's tokens. Nevertheless, the court will allow the claims against Samuels to proceed. The court's ruling is based on the decision of Sarkuni vs. BZX DAO, where the court held that the plaintiff's partnership allegations were sufficient under California law. Specifically, the court ruled that plaintiff's allegations that Lido DAO was comprehensively involved in the creation and issuance of LDO, that it worked to get crypto exchanges to list LDO, paid exchanges to carry its promotional videos, and encouraged people to purchase and participate in its governance activities are plausibly sufficient for purposes of solicitation. In addition, the court has also concluded that Andreessen Horowitz can be joined as a defendant because the claim against it is also a joint and several claim against the DAO. cites the U.S. Securities and Exchange Commission's lawsuit against TRON founder Justin Sun and 3 of his companies intensifies a legal battle that could have major implications for crypto assets. The SEC's complaint alleges that Sun and his companies have engaged in unregistered offerings, manipulative trading, and deceptive touting. The suit seeks to impose permanent restraints, conduct-based injunctions, disgorgement of ill-gotten gains with prejudgment interest, and civil monetary penalties. Sun and his companies have argued that the SEC has no jurisdiction over them. They have also argued that they did not knowingly promote or manipulate their tokens in the US. However, the SEC has argued that it has personal jurisdiction over Sun because he spends substantial time in the US, specifically in New York, Boston, and San Francisco. The SEC has also alleged that Sun's companies used US crypto exchanges to market their tokens and manipulate the secondary markets for TRX and BTT. On December 13, the company behind stablecoin TrueUSD sued Coinbase, claiming that it had engaged in anti-competitive behavior by delisting its WBTC token. WBTC is a wrap version of Bitcoin that is traded on Coinbase's platform. The lawsuit cites the Sherman Antitrust Act, which was used to break up Gilded Age monopolies like Standard Oil. Coinbase denied the allegations in court papers and declined to comment on the litigation. Representatives for Sun, who is not a party to the case, did not respond to requests for comment from DL News. Meanwhile, the ousted CEO of Archblock, developer of stablecoin TrueUSD, has filed a lawsuit against members of the firm's C-suite. Daniel Jiang says he was pushed out of the company in mid-2020 amid negotiations with TRON to sell the TrueUSD stablecoin to the blockchain giant. He says he wanted to reveal the firm's pivot away from the tokenization platform it had promised investors, but was blocked by Cosman and senior staff who feared they would lose their cash cow. The lawsuit has set a precedent for the use of the Sherman Antitrust Act in cryptocurrency litigation. It has drawn the attention of prominent legal scholars, including Van Eck advisor Gabor Gurbax. He wrote a post on X, formerly Twitter, tagging major exchanges and urging them to investigate the matter.